Does anybody debate the fact that I've crushed every single one of these? Let's do another one.
Okay. Welcome back. We're blind ranking. We are just going blind ranking. We're doing a lot of these at once, and the latest one is going to be market considerations. Tim doesn't have the time for me. Well, he's trying to make the time as we figure out the watch scenario situation here.
Need to set my watch, dude.
Now, I want to preface this by saying, obviously, we're blind ranking these, so Tim doesn't know what's coming next, and we have to rank these 1 through 5. And this will be sort of market conditions that are deal breakers for whether or not you would choose to invest in a property there.
Okay. I like that. All right.
Okay.
Well, let's dive into it, and then I can give context to why.
Let's go population growth as a market consideration. How much is the growth in population in a certain area going to determine whether or not you invest there?
That's a good one. I think this is one of those things where people say real estate always goes up. Real estate does not always go up. Real estate goes up if population goes up, right? Because it's a supply and demand. If there's not enough supply and there's more demand because more people are moving to the area, more babies are being born, there's more immigration, there's more whatever, and there's a limited amount of supply, prices are going to go up. That's how it happens. If population goes down and there's more supply than there is demand, then prices are going to go down as well. And if you're investing somewhere, whether you want to flip houses or you want to buy and rent properties, there needs to be a certain amount of demand, right? In Cleveland, Ohio, you got all these rough parts of town with all these boarded up houses. If you eliminate all those boarded up houses, reduce the supply, is there more demand? Do prices go up? What does all that look like? Do yards get big? I don't know. Anyways,
it's a bigger factor than what people would say, and
yeah, it's a big factor. The other thing is, though, even if population is going down, if you own a building and you have this amazing building, it's all brand new and beautiful and wonderful, and you manage it properly and your prices are the same as my building across the street, when it comes to housing, you could get 100% occupancy and I might drop down to 40% occupancy. Instead of something like self-storage, people don't really care much about self-storage. So it's like if you have a self-storage and I have self-storage and there's too much supply for self-storage, it cannibalizes both of us, right? You drop down to 60% and I drop down to 60%, as opposed to you being at 90% and me being at 40%, right? In real estate or in residential housing. So twofold. It's a big driver, especially for appreciation and rent growth of the property. So, population very much matters. At the same time, if it's kind of a stagnant population, not the end of the world, because you can still take a substantial amount of market share in your own market.
So you're saying population growth for self-storage is way big of a factor, way much more of a factor than it is for...
Yes.
Okay.
Yes.
Is your example there.
And how much population growth and or stagnancy and or population loss there is would dictate what this answer is. But let's just say steady population growth in a market is something that you definitely want to see. And even if it's not, I live on Isle of Palms, which is an island, it's already fully built out. You can't put any more people on there. But the greater area of Charleston, South Carolina is growing considerably, which drives more demand to all properties and all, even micro markets in Charleston. So my prices have gone up dramatically because Charleston overall has grown. Again, a lot of moving parts, a lot of variables that you need to weigh out. I would say population growth for looking at a new market is...
Ooh.
I'm gonna go 2.
2. Now, if this is the first time that you've joined us for a blind rankings, first of all, welcome. Thank you for joining us. Thank you for finding us on this Legacy Wealth YouTube channel. Tim has been Tim has sort of put the crown on himself to say that he has not backed off of any of these rankings after they've been established. Typically, one of the benefits of doing the blind rankings is
I've gone 5 for 5 on all of them.
Somebody gets to the end and they're thinking, oh no, I can't believe I did that, or I didn't see this coming. But we haven't necessarily had that. So the drama of the final list really hasn't been there, but we might get there for that given
we'll see
the pensiveness that you had with the first one. Next one is job diversity and stability in terms of a market condition when you're looking to invest? Where do you put that?
I mean, obviously you want people with jobs. I look for big anchors, and that anchor could be government jobs, right, in a capital city. It could be higher education, right? There's an anchor of this university that's locally that provides all the jobs and consistent support of all the other ancillary businesses that come with it. Then there's obviously big business could be a big one. Hospitals could be one. Military bases could be one. So it's very important to have some sort of economic anchor.
You invest in markets, though. I would say maybe the further you get away from a big city, the less potential that you have for an economic anchor.
Yes.
Okay.
Yes, but there's still like hospitals there.
Sure. Yeah.
There's still a military base there. There's still a lot of tourism maybe in that area. So there's different things going on. I would say it's number 3 though, because of that point.
So you can still make something work, or an investment is still a good investment if you can't necessarily identify an anchor, or that isn't as important as population growth.
Not as important as population growth. I'm considering actually putting it between 3 and 4, but it's kind of, I'm going to go with 3. Let's leave it at 3.
Okay, next one is school districts. How important is school districts when you're considering investing?
So it depends on the type of asset that you have. If you have single family homes, you probably want to be in a great school district. For us in multifamily, it's less of a driver, especially in multifamily where you have smaller apartments. We have one in Houston that has like all 3 and 4 bedroom apartments in a great county. It's more of a C plus building, but it's in like a B plus A minus type of a county. Like the average home is $700,000, $725,000. And our apartments, which were built long ago, they're 40, 50 years old, have a disproportionate number of 3 and 4 bedroom apartments. And it's flanked. It's got a school on one side, and it's got like a police station or whatever on the other side. So it's like very desirable for families because their kid can just walk right to school. And you don't have to worry about that. So that works really, really well for us. For newer buildings, usually you're not building these larger apartments with 3 and 4 bedrooms. Usually they typically cap out around 2 bedrooms. So because of that, you're not attracting families as much in those areas. And because you're not attracting families with kids in school, it's lesser of a concern for a lot of residents.
Are there any assumptions you can make about the area based on a good school district that has nothing to do with your tenants specifically sending kids to school?
Yeah, I mean, obviously there's going to be, it's probably going to be, if the schools are better, it's probably also safer. There's probably also more economic stuff going on, and it's probably more desirable of a place overall to live. All right, this one's a hard one because all of these are kind of like balanced. You look at the global picture of it. Let's go with 4.
Okay. Wow, interesting, because we typically set the ends early and then we work on the middle. We have the middle now and we're working on the end. So the next one is crime rate for market consideration. Where does crime rate fit into the big overall picture? Number 1. Crime rate is number 1.
It's either worst or it's either least important or most important right now. And so for where it is, I got to put it at number 1.
It's that simple.
Dude, who wants to live in the hood, man? Nobody wants to. Like that's a basic need. Shelter over your head, clothes on your back, food in your belly, and soon thereafter you need a safe place to live.
Right. And if you don't have that, you can't really think about anything else.
Exactly. And that drives your level of happiness and welfare altogether. I might put that number 1 anyways.
Anyway, we are putting it number 1. So crime rate's number 1. What do we say? Population growth 2, job diversity 3, school districts.
Not job diversity. Jobs.
Economic anchor.
Stability. Job stability is number 3.
Okay. And then school districts 4. So this last one is property tax environment. You put that last?
Yep.
Okay. Care to expound upon that?
From a rental standpoint, obviously, there are some places where I prefer not to go because the property taxes are so high. But they also have great schools. They're also safe. They also have a lot of economic
There's ways to
stuff
mitigate
going on.
that, yeah.
And so because of that, that can be offset by all the other good things. And usually high property taxes mean it's usually a better area, usually. Not always the case, but I'm thinking about Lakewood, Ohio, right, where my office is. In Lakewood, great school system. Everything's walkable, tons of economic stuff going on, like retail store, but it's got huge friggin' property taxes. If you buy a place for $500,000, you're paying 10 grand, or probably closer to $12,000 or $13,000 a year in property taxes. You're like, what? Versus, my house down here, I bought it for $3 million. My property taxes are $10,000 a year, right? It's like totally two different things. That's a low. I do look at it, but it's low on the list. So I put it number 5.
And it would be lowest on
It would be number
list.
5 anyways. I think I got this one perfectly correct again.
So just to recap, and then we'll sort of follow up. Number 1, we went with crime rate. Number 2, population growth. Number 3 is an economic anchor. Number 4 would be school districts, and then number 5 is property tax environment. What else? What are we missing here? What are some big factors that weren't listed here that would kind of fit in?
I like it.
And where would they fit
I agree
in?
with it.
Those are the 5 biggest.
No,
Those are the 5 no, I understand.
I agree with the order.
I understand. Knock me over with a feather that you agree with your order.
Still agree with the order.
Okay, but let me ask, what are some other considerations that may
Wouldn't change a thing.
Wouldn't change
with that
a
order.
thing. You like the order. We're stamping the order in ink. If I could take a minute and have you stop spiking the football, what else would you put in here? What other factors should people be considering from a market consideration standpoint that might be more important than some of the things that we ranked perfectly?
I would say one thing that's not in there is like how landlord-tenant friendly it is. There are certain municipalities that are far more tenant friendly and certain municipalities that are far more landlord friendly. If you're owning rental properties, it's definitely easier to live in or own in an area where if somebody doesn't pay their rent, you post a notice on the 3rd of the month, you have a court date before the end of the month, and they're out, or they're middle of the month, and then they're out by the end of the month, right? That 30-day timeline in Georgia, for instance, is a lot easier to work with than potentially taking 2 months or 3 months to evict somebody maybe in the Northeast or in the Midwest. I think, and that leads into another point, which is looking at a market, I'm looking at how many resources do I have in that market? Is my team local to that market? Am I familiar with that market? Do I have a joint venture partner that's local in that market who can dedicate the time and effort and insight needed on this? Or do I have to hop on a plane and fly to Wisconsin where I don't know anybody and I have to go and set up all these new teams and processes and systems and resources and suppliers and vendors and all this stuff, where it's like, I'd rather just, and that would be very, very high on my list, which would be, do I have resources there? Am I already familiar with the marketplace? That is could probably be number 1, actually, because even in the hood of East Cleveland, Ohio, I made a lot of money because I controlled the things that were still inside my control and didn't have good schools, didn't have a bunch of economic anchors, although outside of that there were some jobs and stuff. Beat up properties, high property taxes, tenant friendly, all that stuff. But my team was there and we could go to the property, we could meet with the vendors, we could meet with the contractors, we had people who were willing to do the renovations, we had the nicest houses in the hood when we had bought like some portfolio stuff of LIHTC, and we got to attract the best tenants, and then they never left because they didn't want to. There wasn't anything better. So like, there's still ways to win.
That kind of goes to your whole, you've got to set your own sail regardless of the waves, right?
Yeah.
In terms of, if you can if you have the expertise, if you have the knowledge, and you can control what's in your control, then that matters more than the external factors.
Yep. Having control, local control over your portfolio is the number 1 factor.
Okay. More so than anything else. Nailed it again.
Thanks,
impressed. Very impressed with that, and we've
Appreciate that, buddy.
just made through another blind rankings. We'll have some more coming up. If there's something that Tim forgot, if you take issue with some things that Tim may have said, go ahead, drop it in the comments. Thank you for joining us here on the Legacy Wealth YouTube channel. We'll see you next time. Until then,
be your best.